Welcome to Brewed in Monmouth, the real estate tea with Kate and Doreen. We're here to talk homes, hometown gems, and real conversations with the entrepreneurs and locals who keep Monmouth County buzzing. I'm Kate, and as always,
I'm Doreen. Each week, we're bringing you the voices behind the businesses, the stories behind the sales, and the tea you need to hear. So grab your favorite drink, and let's get into it. Hello, and welcome to a new session of Brewed with Monmouth with Kate and Doreen. We're so excited to have Neil Surgenor with us today, who is with Truist Bank, and his expertise is physician loans. And I think that that's a really great opportunity to talk to our audience about, because we do have so many physicians down in this area with all the amazing hospitals that we have down here, and they all just keep recruiting people down, whether it be Memorial Sloan Kettering, JFK and Barnabas, Hackensack Meridian. So tell us a little bit about your area of expertise and this wonderful niche business that you have.
Perfect. So I've been in the business now 25 years. I came out of Wall Street into lending 25 years ago, and then found my way to helping physicians. And physician loans are for doctors and dentists, and the program's really amazing. So it's been my specialty for quite some time. I lend everywhere in the nation, with the exception of Arizona, Alaska, and Hawaii. And so Truist is a really front runner in this program. So this program was designed for physicians that maybe haven't had the time to really save a lot of down payment. So this program allows for people to borrow up to 100% financing to $1 million. Then it goes 5% down up to $1.5 million, and 10% down between $1.5 and $2 million. So this was designed in an effort to help physicians that, again, maybe they're going from $60,000 to $70,000 overnight from training when they go into their first year attending, and then they're able to go from that kind of income up to anywhere between $250,000 and maybe $600,000 overnight. But they haven't had enough time to save 20% down to avoid mortgage insurance. So the product is really beneficial for them because it doesn't charge mortgage insurance. Like any other loan, usually once you get over the Freddie Mac, Fannie Mae limits, you're going to require 20% down typically, right? This allows them to not put 20% down, and even if they're within conventional limits, they can put zero down and still not have mortgage insurance. So it's a great program that helps them get into a home and not have to deal with a renting situation.
Does it take into account possible student loans that they might still be carrying, or?
Yes, excellent question. So there's a lot of better ways that we look at student loans. So when you deal with Freddie Mac and Fannie Mae conventional loans, or FHA, there's a certain number that you have to quantify them in their debt-to-income ratio, either 0.5% or 1%, right? And so that often disqualifies somebody from buying a home, and we'll look at it more favorably. So we're more flexible on that. So we may look at something that's deferred on their credit, or something where maybe they've got proof it doesn't start for a certain amount of months out of closing, and it gets a little bit into the weeds as to how we look at them, because it differs between people in training and people practicing. But it's overall just much more easier for them to qualify, where usually that's something that impedes them from qualifying. Also allows them to be able to buy a home up to 90 days prior to their start date.
Wow.
So the third Friday in every year, third Friday in March, not a date, just the third Friday, is called Match Day. And Match Day is when residents around the country, med students, match, right, to their internship. So people know what residents are. They watch the hospital shows. They just match from their med school. And so on that match day, they're able to now look where they're going, right, where they actually match to, and they're able to, look for a home as opposed to renting, which is often more difficult than finding something to buy nowadays, and find something and close up to 3 months prior. So they can move. Sometimes they're moving across country with their families. It allows them to move into a home without the stress of that new job, happening at the same time. So they can settle in up to 90 days before their start date. So we need no pay stubs, no income other than an offer letter or a contract stipulating their start date and their income level, which is really great. Yeah.
So what kind of student loan levels are you seeing with your average client?
Student loans range anywhere based on specialty from $250,000 up to $800,000. Wow. So I'll see a lot of student loan debt. All right. So I had one this morning that had $750,000 in student loan debt. I'm counting zero because they were deferred for greater than 12 months. Didn't count them at all.
And how do you get the deferral?
It's on their credit. Sometimes you'll see it on credit. In this case, it was. So you'll see they're either deferred, or we can get something from a student loan simulator, which is a simulated payment they can put in their new income they're going to have, and then look at an income-driven repayment. None of these things can you really do with any other program, right? So we'll often be fine with student loans. We find a way to be able to navigate through that because by the time they go into repayment, they don't really have a problem paying them anyway, right? Yeah. That's what they do. They're going into significant income, and so we don't hold it against them early. Right?
Wow. Now, is this something? This is probably a dumb question, but is it something that physicians and residents, are they told this early on? Do they know that this is an option, or is it something that they only heard because a friend went through it or something like that? Like, do they teach this to them in school?
Yeah, and that's a great question, which I love when you invited me to do this because I thought to myself, part of my problem is explaining to people that it's not too good to be true. Because that's what I get all the time, right? Skepticism sounds too good to be true. Wait, what do you mean I can get no money down and not pay mortgage insurance? And so I'm often overcoming that objection or that fear that maybe there's a catch, right? And there's not. Mm-hmm. And people often think, because I like to say that they Google diagnose themselves in the world of mortgages, and they know exactly what I mean by that, because they're researchers by nature and highly intelligent usually, and what they're doing is trying to figure out the mortgage world on their own. Much like somebody thinks they don't need a realtor, maybe they can navigate this, and they learn really quickly that there's a lot of necessary talent to be able to help them in this process. And so when they go and figure that out on their own, there's a lot of misinformation online. And so I would always encourage somebody to just talk to a professional, someone licensed, certified. Everyone takes advice, right? Everyone knows somebody in our business. Your uncle's mother's sister's friend once sold a house. They must be great, right? And unfortunately, they don't look at their resume and what their training is and what their reviews are and how long they've been doing it and do they work for a large institution. So part of my problem is just getting over that hump of this is not too good to be true. It's actually the better product of all products. The only time you wouldn't use a physician loan is if you don't qualify, maybe a challenged credit or something.
Right.
Then I'll go another direction.
Right.
Or sometimes when you're too long out of training, which is residency or fellowship, maybe you're 15 years practicing, maybe you should have a little down payment at that point. And that's the thought process. But the loans are really tremendous. So
they're spending, not saving.
Yeah, and this is a tremendous business helping doctors. So last year I was, I think, number 22 in the United States as a loan officer, and 99% of my business is physicians and dentists. Just to give you some concept of that, this is a big business, right? But it's not known by most. I talk to realtors on a weekly basis. I'll find a realtor that's been been working as a realtor 20, 30, 40 years. Never heard of the program. And so they're very skeptical, right?
Well, that's why it was very nice with the offer that came in to me. There was a nice letter explaining everything. I had doctor loans before, so I was a little familiar with it. But it's just a nice way that you try to educate the person that is on the receiving end of this, whether it be the agent or the seller of the house that these people are trying to buy, because they might not see it as a positive if there's no money down. They're thinking they have no money, they can't afford this house to buy and above their whatever it might be. Yeah. So it's nice that you're able to explain that. And you said that you have like a dedicated staff.
I do, yeah. Thanks for bringing that up.
That helps you manage all the clients.
Yeah, I'm very fortunate. Based on my doing this probably too long, I should probably retire. But I have dedicated underwriters, processors, and closers in one of the biggest banks in the country, which is unheard of in the business, right? Usually you're sharing with a number of other loan officers, and when you need something, you're knocking on the door hoping that you're getting in line for a favor to get something done. And so you kind of get that experience of dealing with a broker or a smaller lender, but you don't lose the pricing power and the, a bank that's lending the actual money, right? Going to the source. But, this program, it's funny because I get that objection, if I could touch on that, where people are often thinking, well, they've only got 10% down or 5% down. But if you really think about it, we can do 100% financing. Let's say there was one yesterday where they have a $900,000 purchase, right? And they're putting 10% down. In a normal world, right, when somebody's in a jumbo arena, they have to put 20% down or they pay mortgage insurance, yes? And so here, they're putting down 20%, or if they're in a jumbo loan, they have to put 20% down. There is no mortgage insurance. And then if the appraisal's short, which often listing agents are afraid of, they have to come up with a difference, that gap, right? If I'm lending at $950,000 purchase and they're putting 10% down, I don't need that 10% down because I can do zero down to $1 million. So what happens? You've immediately got that 10% cushion, which is really nice when you think about it because you're making the offer. It's like somebody having 30% down instead of 20. I hope I'm not doing a bad job at explaining this. So it's really great because when you think about it, you've got this actually stronger loan proposal, this stronger offer. And so I try to get on the phone with anyone that any of my clients make an offer. I try to get on the phone with the listing agent to make sure I answer their questions and better make sure they're comfortable with the program.
Right, because they have to present it in the right light to
Exactly.
the seller who might not have any idea of what you're talking about either. And all they're looking for is cash, cash, cash.
Exactly.
Have you had any issues in multiple offer situations?
Every day. Yeah, every day.
Just
I
because
mean, we
it's
live in New York and New Jersey, so it's a multiple offer situation all day long. And I do my best to explain the strengths of the borrower. Look, I can move as quickly as cash, but everyone has to get title work done. But the bottom line is if somebody's making a cash offer and they're talking to you with a mortgage, then clearly your offer's a bit higher. Otherwise, they're still steering toward that. But yeah, that's a constant fight all day with anyone that doesn't have all cash, right? And so I try to do a good job explaining our ability to move quickly. Again, we're the source of the money. So most people you talk to that can move quickly, they're a correspondent lender or a broker, which is 2 layers from the actual bank, right, behind the scenes. And so I'm the actual bank with the money. So my underwriter is the actual decision maker. You're not talking to their underwriter who then has to go to the actual bank behind the loan and underwrite it a second time.
It's more direct.
And I can move just as quickly. So I take all those layers out of the middle and can move very quickly. And once I explain this, if I need a commitment, I know I'm talking real estate terms, so I don't know the audience here, but
okay.
But we can move, and I can get a commitment in 10 days, and I can close in a few weeks if I wanted to. In Jersey and New York, usually the attorneys move a little slower than that anyway. Yeah.
Yeah, but it's just such a great opportunity with for our audience to know, or even for us to know and to share with our agents in our office to know how important it is to work with somebody like Neil if you have a physician being transferred into the area or wanting to buy a home in the area. Because we do, Hackensack Meridian is constantly recruiting people down. Barnabas, it's constantly recruiting people down. There's so many hospitals and surgery centers or whatever it might be, or doctors that might want to open up their own practice.
Yeah.
And you said dentists too.
Dentists too, and something I thought about if I could segue for a minute. Often I have somebody that's buying in that 1.5 to 2.5 range, right? And they have to put 20% down. That's the mandated, that's the minimum you're going to get when you do a loan, and I don't need 20% down. So I often find that sometimes what impedes somebody from going higher and looking at more inventory is the down payment money, not necessarily the income. So if somebody's buying at, 1.6, right? They've got to put 20% down. I only need 5% to 1.5 and 10% to 2. So let's just say it's 1.55. I need 5% down. So I can now take them and pre-approve them up to $2 million, where they limited to 1.5 at Chase or Wells City. Now that just opens up a whole lot more options for you guys in a really challenging market to put more,
it
things
does,
in front of them.
and it gives them. It opens up the ability for them to buy a house that might need a lot of work, a lot of renovation, because now that cash is still in their pocket.
Exactly.
That they can use towards the renovating, whatever it might be that they're buying.
That's right.
As opposed to trying to buy up higher, turnkey, and all that other stuff. They have the money to do that now, which is really very, very important in this market.
Yeah, we find that to be a great benefit of the loans.
Yeah.
Anything with veterinarians?
DVMs, unfortunately, we don't do DVMs and nurses and nurse practitioners and physician assistants and so forth. But there are some lenders out there, and I like to say when you find those lenders that do those designations, because there are, and I could refer you to them, I'll often find that the pricing is a little bit impacted by that, and you're often better if you can going with a bit of down payment because you get much better terms. So there is a product for that. I don't have it, and I would always like to be the first call, and I could direct you if I can't help you anyway. But you really want to just try to look at the options first, because it's really like an FHA loan. Great product in the place where you need it, but it's probably not your first choice if you don't need it. Am I right? So it's the same thing with veterinarians or physician's assistants and nurses. So there are a couple of banks that do those programs, but then their rate tends to be impacted by that because they know it's kind of a really niche product. So I usually try to find out if there's another way to make that work first.
Wow.
And if not, I'll
very
refer you.
interesting.
It's crazy because some nurse practitioners now are really doing very well, almost like a GP.
Yes,
position.
my youngest daughter's becoming a nurse probably in a month, and so she's busy between
congratulations.
the nurse, the anesthetist, and MP right now. We're just discussing that. I just learned something about New Jersey, that nurse practitioners in Jersey tend to be paid a little less because they're a little more restricted on the prescribing side in the state for some reason. So
Regulations in New Jersey, I don't believe it.
Yeah, I know, right? Yeah, tell me about it. Moved here from New York, so we're been 9 years getting used to it.
Yeah, it's crazy. But that's really it's great information, and I'm so glad you made the trip down. And any other advice that you might want to share with somebody that's not familiar with it, or just give us give them how to reach out to you?
Yeah, I think the main thing is, and I think we all probably run into this, is that people think, let's find a home first and get qualified later, right?
Oh, yeah.
It's always the case, and a lot of the time, right? I mean, I don't know if I want to look at my credit yet. I don't want to, and I always suggest that it's always best to first find out that you have the money and what you qualify for. Don't assume you do, because you're going to want to see that letter. The listing agent's going to want to see it. The perfect house is not going to be on your timing. It's going to show when you least expect it. And you want to be prepared, especially in this market with a multiple offer situation. So you have to be ready. More importantly, it helps you kind of figure out what your price range is and your comfort level. Even if you can afford it, this tells you where you feel comfortable, right?
Right.
So always just call somebody first. You've got nothing to lose. There's no cost, no commitment. Let's get you pre-approved. But you can reach me by phone. My cell phone number is 212-933-9900. And if you just Google my name and physician loans, fortunately I come up.
Good.
And it's Truist, Truist.
Truist is the combination of SunTrust and BB&T that merged some time ago. So yeah, it's probably the 7th or 8th biggest, I think, bank in the nation right now. So quite a big institution. Yeah.
That's fantastic.
Yeah.
Well, I think you probably helped a lot of people figure things out. I mean, as we move into this market, we'll make sure that we know that our clients who happen to be doctors know to give you a call first if they haven't already. And just increase their buying power so very easily.
Yeah. Sorry, there's one more thing too. We also have a program for non-doctors, DVMs, or anyone for that matter, that does 10% down up to 1, 5, 3, and 5 million. So there's different levels there with credit scores and so forth, but no mortgage insurance.
Oh, that's
So we
great.
actually have a program with 10% down, no MI, and I can get you up to those levels too. It's a little different from the physician product, but please call because I do all loans.
It's good for
FHA,
attorneys
VA.
too, and other,
Oh, 100%. I
Yeah.
3 attorneys last week doing this program, and our rates are really, really great. So, yeah.
And what is it called?
It's called the Premier Program.
Okay.
Yeah.
Okay.
I suggest call, and then we'll guide you through these options, go over them. I don't just look at physician loans.
Okay.
So I'm going to look at every product out there and find out what works best for you with your current situation, because sometimes it might make sense to go another direction, and I'm going to try to find the best way to save you the most money.
Great.
Yeah.
Smart. Yeah.
Thank you so much for your time.
You're welcome.
Yeah, it was really, really exciting to meet you and hear everything that you can offer these clients that are looking to move here.
Oh, thank you for having me.